Hello, everybody. This is your FDBC 305 Food and Beverage Cost Control Quiz number 1 review. I'm going to take a little bit of time here and go through some of the details of the work that we've done so far up to this point in our course, with the goal of helping you prepare for the first quiz coming up in your class. So first, let's get into some of the details and what the quiz is going to be made up of and look like. So it is part of modules 1, 2, and 3. And I also want to draw your attention, it also does include the basic concepts that we talked about in our introduction first class together as well. I'm going to get into some more of those details here in just a moment. The quiz has 68 marks in total. It has a 20% weighted towards your final grade in FDBC. We've got 11 multiple choice questions, and I'll share with you within those 11 multiple choice questions there is a mix of concept theory based questions and calculations within those multiple choice questions. We also have 5 short answers as well. Special note here, basic calculator is required, and it's the only type of calculator that is going to be accepted. If you don't have a basic calculator, then unfortunately you won't be able to use it, and you will just be doing the math the long way. Okay, so let's get into some of the details. Food and beverage concepts. This again was the very beginning of the course in the first little bit that we spent together. In this concepts, we talked about food cost calculations, we talked about beverage cost calculations, and we even extended it into labor cost calculations. We looked at our cost of goods sold, or the COGS, C-O-G-S, and how we calculate those. We talked about what was profit, specifically what is profit compared to revenue and the difference. And we looked at how to calculate profit. Simple formula of total revenue minus our total expenses gives us our profit. Specifically, when we're talking about our food and beverage cost percentage, it starts with this formula, cost divided by revenue. So whether it's food cost divided by food revenue, that's going to give us our food cost percent, or if it's our beverage cost divided by our beverage revenue, is going to be our beverage cost percentage. Pretty main formula that we've used on a consistent basis up to this point as well. Also in the concepts, we talked about the cost of goods sold and how to calculate the total value of the food or the beverage that we have had. So we take our beginning inventory and we plus our purchases, or add our purchases to our beginning inventory. By subtracting our ending inventory, we are left with our cost of goods sold. So this is the actual cost of the food or the actual cost of the beverage that was sold. And this is key in a lot of our calculations. So module 1, let's get to there. That was our control functions. We talked about the control cycle. We looked at the steps in the control cycle, so establishing standards, being able to measure the actual results against the standards. We compared those, and if we had variances between the actual and the standard, were we able to take corrective action to fix those? And then based upon our evaluation, was it successful or not? This introduced the concepts of the inefficiency cost, so having those variances and what is that loss. And if we did have a loss, how much revenue was required to be able to make up that loss? And then through our actions, we introduced the cost-benefit analysis. So by introducing the corrective action, was it saving us money or was it costing us more money? So the control cycle and the stages of it. It all starts with the menu. So whether you are a fast food restaurant, a fine dining restaurant, or a hot dog stand on the street corner, it always starts with the menu, and everything flows off of that. From our control functions, moving forward into that, we also looked at our inefficiency costs. So this is the example of the flash activity that we have on Brightspace. So by being able to measure the actuals versus the standards, we could then determine if we had any differences or inefficiencies. We also did this in cost benefit. So being able to recognize if we have that variance, how much it might cost us or save us by implementing it. You may remember this exercise in class. There's also a flash for cost benefit analysis that I'm sure you've completed several times in preparation as well. Again, showing us, is it a increase in profit or a decrease in profit? So then with this, it helped us be able to calculate the revenue that is required in addition. So when we have those variances, how much additional revenue is required? It's our loss of profit, or that loss of money, if you will, and dividing it by our percentage, our profit percentage, the amount of revenue additionally that we require. In Module 2, we talked about standards, standard purchasing specs. We talked about standard recipes, standard yields, the portion sizes, and the portion costs as well. In Module 2, we introduced simple versus weighted average as well. So the first standard that we spent quite a bit of time on was our recipe and recipe costing. In this, we looked at unit conversions, and what I mean is converting ounces, fluid ounces into milliliters, or converting grams into whatever the unit that is desired. So unit conversions is part of the recipe costing and something that should be reviewed. Through the recipe costing, we were able to determine our standard portion cost. So if we were to make one portion of whatever item it is that we are making, what would that cost be for one portion? This was our total cost of all the ingredients from the recipe divided by the yield that the recipe has, or the number of portions that we can produce. So if it's a cookie recipe and it's 12 cookies, then we would divide it by the 12 portions. This gives us that one standard portion cost. We also looked at the adjustment factor for converting recipes. So when that recipe we needed to make more, or we needed to make less, so that we could produce just the right amount, helping with spoilage, waste, and etc. We did a couple different things here all around recipes. You may remember our upside down mat. It's a popular drink at the gate, where we did some calculations to be able to understand what one drink would cost us. We did this in Flash as well too, with our cashew chicken. Certainly a much larger recipe, but the process is exactly the same when we're calculating and when we're doing our conversions. The next thing we looked at is our yield calculations. We did quite a bit here. We looked at our yield percentage. So this is our edible weight divided by our as purchased weight to give us our yield percentage, or the amount of product that is remaining after we've rendered and prepared and cooked the product. Give us the servable amount, if you will. This helped us then be able to calculate our cost per servable weight. So we took our AP price, and that's the as purchased price. So how much did we buy it for? We divide it by our yield percentage that we calculated above, and this gives us our cost per servable weight. Sometimes that's the cost per servable ounce, sometimes it's the cost per servable pound, sometimes it's the cost per servable gram, etc., etc. The other calculations we did within this area was the required quantity. So by able to use the yield percentage and how much product we have remaining, we're able to calculate exactly what is required as we're preparing product. So it's the total number of portions required, and we're going to multiply it by our edible portion size. For example, a 6-ounce portion or a 12-ounce portion. Divide this by our yield percentage and it gives us that required quantity. Really beneficial for portioning. Cost factor was simply a tool for us to be able to adjust our cost per servable weight when we have a new AP price. So cost per servable pound divided by our AP price gives us that cost factor. And remember, it's a factor, it's a multiplier, so there's no unit attached to it. Taking this cost factor, we can multiply our new AP price, and this then helps us determine our new cost per servable weight. Now we did quite a bit here work-wise, that is. You may remember this in-class exercise where we averaged different roast and able to calculate the yield percentage for several roast. Based upon our yield percentage, we were able to calculate the individual cost per servable weight for those roast. And then finally we were able to calculate the required quantity which then supported us in answering the question of how much would we order. Again, hopefully that you're getting into Flash, you'll recognize that we have a Flash activity as well too that followed that same idea. Cost per servable weight calculations using our yield percentage, and so forth and so forth. So I certainly do encourage you to get back into Flash and practice these calculations. Next, in Module 2, we talked about simple versus weighted. We changed our calculations when we were looking at calculating our average amounts. Instead of simply just using one metric, this provides us a much more detailed and often more accuracy after we've sold and consumed the products. The slight difference here is we're going to take the total menu cost and we're going to divide it by the total menu sales. This gives us our weighted average food cost. And we did do some work in class regarding our weighted average food cost. You may remember this activity where we did price throughout and we were able to compare what the simple average was versus the weighted average. Again, because we know the number that is sold, our food cost percentage therefore is much more accurate. Okay, on to Module 3. We looked at purchasing to service. We spent quite a bit of time talking about the purchasing cycle, talking about how to select the right supplier. We introduced the minimum maximum ordering. We talked about receiving and all that's there, and then production planning and time series forecasting is how we brought this to a close. So you may remember our 7 steps to the purchasing cycle and how the order flows from the food and beverage department through the storeroom, requesting the purchasing department to replenish the storeroom. Why do they talk to the receiver before the order, share the information with accounting? The first thing that the receiver does is putting away the order into the storeroom and then provides the information to accounting, and the very last thing that happens is accounting then pays the supplier. Have a good understanding of the concepts of the purchasing cycle. Remember, at each stage of the cycle, we have the ability to control our costs. This led us then to our minimum and maximum ordering. So the system focuses on determining our levels of inventory, sometimes referred to as PAR. So you may remember then in class, excuse me, we did ground beef and we had a minimum amount. We understood our usage and how much we used per day, and then ultimately how much we used throughout our order period. We are able to determine our order point, that moment when we pick up the phone to place the order, and then understanding the lead time. How many days does it take for the order to get there? And then based upon this, we can adjust our stock. So if we have an excess amount or if we are short, we can adjust our ordering up or we can adjust our ordering down based upon our needs, so that the end result is we don't ever exceed our maximum inventory, while at the same time we ensure that the safety amount is always present, so we also don't run out of any product as well. Next, we finished off with our time series forecasting. This is a great tool that uses historical data to help us be able to forecast our business. And then therefore, again, the better we're at forecasting our business, the better we are at controlling our products. So in class, we introduced this handout where we were forecasting for October based upon this small menu that we have. Remember, when we're talking about time series forecasting and you are forecasting those individual numbers, we always need to round up to the whole number, regardless of what the decimal place is. So for an example, we can't serve 742.42 chicken burgers. We have to round it up to the whole number. This allows us to give us a projected weighted average food cost, then allows us to make some adjustments and be proactive in our business. This activity also had a flash. that I'm sure you're quite familiar with as well. And again, this allowed us to be able to calculate the numbers that we potentially could be selling. Again, better forecasting supports accuracy and the ability for us to control our products. So modules 1, 2, and 3 with basic concepts introduced there as well. We've done quite a bit of work so far this semester. Here is a sampling of the different formulas that are on your formula sheet that will be provided to you in the quiz. But there is more than this that we've talked about that's not present on the formula sheet. For an example, simple versus weighted, that kind of idea. So certainly take your time, go through your notes, use the resources on Brightspace, everything from the video tutorials to Flash to the notes and PowerPoints provided as well. Support each other. Consider peer groups and peer study groups. Contact your instructor if you need any further clarity or support, as we're always able to help you as well. And best of luck on quiz number 1.